Hey there. So welcome back to the channel. Today we're going to talk about pivot points. Pivot points? You mean to tell me that I'm still watching pivot points, that broke ass 100-year-old strategy that was developed by floor traders in Chicago? Yes, exactly those. And I'm going to show you how to use them because you're probably not using them right. You're probably using them the same way I was using them when I first saw pivot points, and I put it on my chart when I was first a new trader, and I thought, wait a second. Sometimes they bounce here, sometimes they don't bounce here, sometimes they reverse here, sometimes they don't. But I've figured out exactly how they work. So stay tuned, and I'm going to show you how I use pivot points and some of the other lines that I use to actually push the envelope today and take 43 $125 trades. So here we are, second day into the Trump tariffs, and this is my ES chart, and I have two sets of pivot points on this chart. I've got the daily pivots, which you'll see with thinner lines and lines that begin with the overnight open, which would be this line, this line, this line, this being the main pivot, this line being a resistance level, and then more resistance levels above this. But then you'll see weekly pivot points, which the main pivot is not displayed because it's much higher than this, but pressing down, you'll see a support level in yellow here that goes back an entire week, a support level here that goes back an entire week, and a support level here that goes back an entire week. So if we zoom in on the day, you're going to see the pivot points displayed just for this day and just for ES. And basically what we have are a support level here, a support level here on the daily pivots, and then a mid pivot, which is exactly between the two support levels. And then we also have a weekly line right here and a weekly midline right here, because it is precisely between this support level and a support level that is up above here. There, I just widened this up a little bit to show you a little bit of the pre-market action. And I will show you the spots where it was likely to have bounces or reversals just using the pivot points from today. And here in the pre-market was a perfect to the penny bounce off a weekly level. That was about 2 hours before the market opened. And then the market opened, and you see that there was a reversal right here, but you see that this candle did not quite go up to that level. And in a moment, I'm going to tell you why that was a good entry for a short, for people who like to take shorts. I don't, because of what happened on other charts. And what I mean by the other charts is that, as I've said before, if you're trading ES, there are a bunch of other charts that you absolutely have to be watching at the same time. And I'm going to show you those right now. So we've got ES, we've got SPY that you must be watching if you're going to trade ES, and there's SPX. And for that matter, if you're trading ES, you should be watching NQ, Qs, and NDX, and you should be watching VX futures and VIX. Now, why should you be watching all of these instruments to be able to take trades on ES? And I'll tell you the reason is because although there's a significant amount of trading and volume that's done simply on ES, there's an enormous amount of volume that's being traded on SPY, SPX, NQ, Qs, and NDX. In fact, much more trading happens over here than does on ES. So I've got some statistics for you right here. As I've said in other videos, you can trade ES contracts and you can also trade ES options. With SPY, you can trade shares and you can also trade options. But SPX and NDX, the only thing you can trade is options. And these are very, very, very large options. And sure, regular day traders are trading 1, 2, 3 contracts of SPX, but really what's moving the market are the institutions and the hedge funds and the banks that are taking huge positions of SPX and NDX. So it's the bounces that are happening on those charts that you really, really want to pay close attention to. So just a few statistics here. Currently on SPY, we're seeing about $23 to $30 billion of trading every day. On ES, about $500 billion. But on SPX, over twice that at about $1.36 trillion. What about for the NASDAQ? On NQ, you'll see about, on average, around $18.2 billion of trading every day. Qs, about $12 billion. But on NDX, about $130 billion every single day. And for that matter, the options that are traded on VIX down here, that's an additional $1.3 billion per day. And they don't always move exactly the same. ES, SPY, and SPX will move very, very closely together, but they will have different lines. So you want to pay attention to SPX and SPY and ES together, because when there's an area, let's say like this right here, where there's a line that you can see right here, but you don't see a line right there, that may or may not be a very likely place for you to see a bounce. But when you see a line that coincides with a line here and coincides with a line on this chart, and possibly a line on this chart and a line on this chart and a line on this chart, you end up with a very, very high likelihood of a bounce at any particular spot when you see a convergence and a confluence of bounceable lines. And it doesn't have to be pivot points. It could be yesterday's close, or it could be the day's half gap, or it could be the 200 EMA on a 5-minute chart. So even though I'm not showing you any of those things in this particular video, I do hold all of the things on all of my charts when I'm trading. And you would look at them and you would say, oh my God, he's got everything on his charts. There's so much to see and there's too much to keep track of. But the reality is that the only thing you're looking at any point in time is, oh, here's ES coming down to this line. This is the only thing I'm looking at that moment. Other than, oh, I'm looking at this. I'm looking at this down here on NQ. I'm looking at SPY, and I'm seeing if, and in an opposite fashion, I'm also looking at VX and VIX. So if I see a convergence of price coming down to a line that is happening on multiple charts, that is where you're going to find the greatest likelihood of a bounce, even if it's just a small bounce, like this right here. You think, oh, that bounced right there, but it didn't reverse. It didn't move very far. Well, I can tell you right now that this right here, this little bitty bounce right here, was probably about a $500 bounce at least. This is 17,983 up to 18,064. So that was a huge money-making bounce right there. Now, let me zoom in and we'll take a closer look at some of these. Now, I did not trade the first candle. I almost never, ever do. But I did mark this particular candle after the fact, later in the day, because you can't quite see it, but this candle does not go up all the way. I think we saw it a little bit earlier. It does not go up and touch this line. But NQ did on the very first couple of candles, and so did YM. And in an inverse fashion, the very first candle on VIX futures came down and started to mount a bounce off of this support line right here. So for anyone who was really quick off the mark, they could have made a nice short entry. Again, I don't trade short typically. Now, the second trade I did participate in, that was this bounce right here off of the midpoint line between two support levels on the daily pivot points. Why did I decide to take a bounce right there? And the answer is because the same thing was happening on NQ right there, and also VIX futures was hitting a resistance point right there. And likewise, NDX and SPX were coming down to levels that looked very strong because SPX had a normal daily green pivot right here, but it also had a yellow weekly pivot right here. So when I saw things lining up on 1, 2, 3, 4, 5 different charts, and this is just looking at pivot lines, I decided to take an entry. And did I take it for the whole thing? Nope. Again, as I said earlier in the video, I decided to push the envelope and take just about every possible trade I could take today. And I think I traded over, I had very tight stops, and I only took a very small amount of margin. And what I do is I take a $125 trade or $112 trade, which is simply the amount of ticks that will provide me with $100, and then the very next tick for $12.50 that pays for my fees. Now on this next trade, which I did not take short, right here, you don't see any lines, you don't see any pivot points, anything. But what you do see on SPY is a midpoint. You do see on SPX a midpoint. You do see a weekly and a daily line on NDX. You see a weekly line on Qs, and again, on NQ, you see a daily line. And then on VX, it came down and bounced twice on this midpoint line. And on VIX, VIX, it bounced on that line as well. So if I was interested in taking shorts, that is exactly the spot that I'd be taking it. Now, later on in the morning, probably about 1.5 hours into the market, I did take a bounce right here. And you can see the market coming down and actually piercing this line. And I actually caught the bounce. I took the bounce right on the line, and the trade went against me for a minute. Now, why did I take that when there was no supporting line on SPY or on SPX? And the answer to that is because there was a ton of confluence on NQ, Qs, and NDX, and on VIX futures and on VIX. We were coming to a spot that was a pre-market high that I figured would be tested. And essentially, VIX will run up, any instrument will run up to a pre-market high, and it will test it, maybe only for a few points. This happened to be a lot of points. And this bounce on ES happened to be a lot of points. But often, it'll test it, retreat, test it, retreat, and then maybe blow straight through it. So I'm not hanging around for that. I'm just taking my profits quickly and waiting for the next trade to come around. And then later in the morning, actually just after noon Central Time, we had a SPX and NDX and Qs and VX futures touching a significant pivot line. These were the thick yellow lines, so they were the weekly lines. This was a midpoint that VIX slightly pierced, and you don't see any confluence on SPY and ES futures. But I did take that trade because of what I saw on Qs and NDX and SPX and VX futures at that moment. And I took the trade, even though most of the confluence was on NASDAQ, I took the trade on ES because NASDAQ futures is just a little too wild. Do I trade at NASDAQ futures? Yes. But often the It's flying up and down the DOM so quickly that the moment you get in, you can find yourself $200-300 underwater almost instantaneously. So I try to lean against trading NQ. And again, there may have been something else on the ES and SPY chart, which I'll show you in a moment, that confirmed that this was a good place to take the entry. Again, these are simply pivot points. The fat weekly ones, which you're only going to see if you have your chart open to at least 7 days, and the thinner daily ones. Let me take a second here and just say, if you find that you've enjoyed what I've put up, please take a second and click on the like button. And if you want, subscribe and find out when I put up new videos. And also, if you're interested in, I'm thinking about live streaming how and when I take my trades. If you're interested in watching that, leave a message down in the notes below and let me know that you might be interested in watching that, because watching something like that might force me to be more diligent, because I'm announcing trades that possibly other people are taking at the same time, and I wouldn't want to send out any bad signals. But also it might give me the support I need to confirm that I'm taking a good trade for myself. So if you would like to see me live stream this, please let me know. So here we are with the ES chart open wider so that you can see, and I'm going to apply some of the other things that I typically watch on the ES chart and actually on all of the other charts. I will show you that I keep volume profile for the month. Obviously I keep VWAP and intraday VWAP, which I'm going to be discussing in other videos. I watch the 100 and 200 EMA and SMA on the 1 minute chart, and this particular indicator is custom built by me so that I can watch the 200 EMA and SMA on the 5 minute chart, but as displayed on a 1 minute chart, because I know that ES and SPY and SPX are absolutely in love with the 200 EMA and SMA on the 5 minute chart. So I'm going to apply that here. And I've already got the pivot points applied, and I put the day's volume profile on there. I also, as I've shown you in other videos, I have my half gap line, the RTH open, the high, low, yesterday's close, and yesterday's VWAP close. I always watch that. So with all that displayed, you can see that the chart starts to look pretty darn messy. But again, whether I'm watching one chart, which I almost never am, or whether I'm watching all 9 charts, I am watching the current set of candles, and I'm watching to see how it relates to previous price action and where and if it's bouncing, is it retreating on a pivot, if it's coming up and touching, oh, there's the 200 EMA and SMA, and then retreating down to the 100 EMA, and then back up and then retreating down to the 100 SMA, and then running straight up to this pivot point and retreating. And I do that with every single chart that I'm watching. Let me take a moment and I'll set up all the charts the way I typically have them. And this is a good opportunity to discuss these lines and how it relates to where you think price might be going. So we have a bounce down here, higher low, and it starts getting tangled up in these moving averages. And then it blows through this 200 EMA SMA set here. And you think, oh, okay, it's going to run up to intraday VWAP. And then it reverses right here, and you don't know why. There are so many instances where you think that something is going to break through and go to some other level, and it never gets there, and you never really quite know why, and now you do. Here was a weekly pivot point that, sure, had been danced around earlier in the day, but it was a definitive spot, probably because, and you see I have an arrow there, and I have an arrow there because that level was probably significant on some of the other charts as well. So that's one thing that you should be aware of. And here's a good example of a short I did take. This is around 1 o'clock in the afternoon Central Time, and ES had bounced, and we were just discussing how it had come up to the 200, down to the 100, up and down to the 100 SMA, and then it ran up and didn't go to intraday VWAP, but it reversed right here on this pivot point. The support for taking that short trade was, number one, because SPX was coming up and touching its 200 EMA, and also NDX was also at its 200 EMA. Qs were almost touching intraday VWAP, NQ was almost touching its intraday VWAP, and VIX was just slightly away from its pivot point and intraday VWAP. And when this touched this line, that's when I took a short. Now, was it a preemptive short? Yes, it was preemptive because a lot of people will front run their trades. They won't necessarily, depending on the exuberance of the market, price can go to a spot, or it can reverse before the spot, or it can go beyond the spot and then reverse. If it goes beyond the spot, it's because of market exuberance. If it reverses before the spot, it's due to the market wanting to front run the move, because everyone is acknowledging and knowing that, oh, intraday VWAP is right there. So let's front run this trade at another level and see if it can continue in that direction. Now, there are a lot of people who look at my charts and they'll say, oh my God, you've got so many things in your charts. I can't even keep it all straight in my head. And I have to give people the analogy of my favorite avocation, which is cycling. And when I'm cycling in a pack of guys and we are coming down a mountain at 55 miles an hour, I want to see every stone, every stick, every boulder, every pothole. I want to see everything that's in my way. A lot of guys will say, oh, I'm a purist. I like to trade price action. I don't like to have a bunch of messy indicators on my charts. And that's fine. But without being able to see where the barriers are on your charts, you'll miss out on a ton of trades. So basically, I just sit and wait all day long. Usually, actually, I only trade for about 2.5 hours in the morning. But what I'll do is I'll wait patiently, and I'll be watching ES, and when ES gets to a specific spot, 200 EMA, SMA, a pivot point, whatever it might be, I'll always glance at the other charts. Oh, what's happening over here? Oh, what's happening on SPX? Oh, what's happening on NDX? What's happening on VIX? And then I'll either take the trade or I won't. And if I'm wrong, lots of guys will want to, they'll say, oh, this is dancing around this pivot point right here, and I'm going to wait till it gets down to here for a confirmation. Well, if they take their entry here, the distance between here and, let's say, here, where their stop loss is, or maybe above intraday VWAP, could be $400. But my thesis is, okay, if it's going to reverse here, then my stop loss is here, $50 away. And if my thesis is wrong, I lose $50 and I wait for the next trade. And the one thing that I want to drive home is that the banks and the institutions and the big hedge funds are all working with black box trading algo. And when you give it some thought, you realize that trading algos are nothing more than a program that has a set of rules. And there's no rule in a trading algo that says, oh, when it gets up to this area, if it feels right, then take a short. There are no algos like that. The algos are very, very specific. Oh, if it gets up to this line, and everybody sees that line that has it on their chart, but the algos will say, oh, okay, so we're going to watch ES, SPY, SPX, NQ, Qs, NDX, VIX, and VIX. Now we're gonna watch it on a 1-minute chart, a 5-minute chart, a 512 tick chart, maybe a 333 tick chart, because the horizontal lines like pivot points, those will be the same on all charts. VWAP and intraday VWAP will be the same on each chart, but it's the moving averages. It's the moving averages that change on some of these different charts. 5-minute, 1-minute, 2-minute, 512 tick. But these algos are watching them all the charts, all the time frames in real time. And it's assessing, oh, okay, how many of these charts, and let's say I've got 9 here, so maybe they're watching, 30 different charts, and all of a sudden 27 of them are touching something significant at the exact same time. Yeah, you can plan on a reversal right there. Right there. So that's about all I have for this video. Thank you for watching. If you want to see another video, this next one is about volume profile and why you should be watching not only the daily volume profile, but also the weekly and the monthly volume profile. So again, thanks for watching. If you liked the video, please give me a like, and I will see you next time.